Let's have a discussion on the internal auditing function. Topic number 9. The first time we came across this term internal audit was in topic 1 under the nature and the purpose of audit. Being that internal audit is one of the type of the audit, we looked at the differences between internal audit and external audit. For example, the areas of focus, and we say that the internal audit, it focuses on examining the activities and the procedures of an entity to ensure efficiency and effectiveness in their performance. Then on the external audit, it focuses on the examination of the financial statements so that the auditor is able to express an opinion. With regard to the persons who performs the two audits, internal audit is performed by an internal auditor who is an employee of the company, while external audit is performed by an external auditor who is an independent contractor. So on this particular topic, we are going to focus on the definition of the term internal auditing function. We also look at the responsibilities, the functions of the internal audit. We're also going to look at the areas of reliance by the external auditor on the work performed by the internal auditor. We just also look at one of the emerging concepts in how internal auditing functions can also be provided through the outsourcing activities. Then lastly, we'll be looking at other elements of the internal auditing function, for example, the internal checker system. So let's continue with our discussion on the internal auditing function. Let's proceed. Siku ilipatia copy. Yes. Okay, so let's continue the internal auditing function. We begin by the definition there of the internal audit. So internal auditing is a continuous independent appraisal of all the activities and procedures of the entity to determine their relevance, effectiveness, and efficiency, and provide feedback to the management. That means one of the internal auditors, they appraise the entity's activities and procedures, then give recommendations for the improvement to the management. The Institute of Internal Auditor defines internal audit as an independent consulting and appraisal activity designed to add value to the company's operations. Then we have got ISA 610, and by provide various guidelines and the procedures on how internal auditing functions can be performed. So it defines internal audit as a function of the entity that performs assurance and consulting activities designed to evaluate and improve risk management and corporate governance. So that's how the ISA 610 defines the term internal auditing function as just being an entity that performs assurance and consulting activities designed to evaluate and improve risk management and corporate governance. I move on to the scope of the work and responsibility of the internal auditors. You should be conversant with what are the responsibility or the duties performed by the internal auditor. When we're looking at the differences in the two audits, the external and the internal, we say that for external auditor, their duties is defined by the Companies Act, while the internal auditors, it is the managers who define them as per the employment contract. However, still, the ISA system identify some of the possible responsibilities of the internal auditors. Number one there, examining and evaluating the adequacy and effectiveness of the ICS and the accounting system. So when they are around, they will be assessing the internal control system and accounting system, then give advice to the managers on how they can improve effectiveness of such kind of systems. Two, reviewing the credibility and integrity of the financial statements by checking whether they have been prepared in line with identified financial reporting framework. So they ensure that yes, managers are responsible to prepare the financial statements, but are they able to do it in accordance with the applicable financial reporting framework? And next, to review the company's compliance with the laws and regulations. They need to check, is the company adhering to the various laws and regulations governing it. These ones that to conduct a special investigation, where frauds and errors are suspected. To conduct special investigation where frauds and errors are suspected. Our next point, to carry out routine functions of verification of assets and liabilities. Then 6, to carry out value for money audit. Is in topic 1. We learned about value for money audit. Another name for value for money audit is operational audit. It has got 3 aspects under which is normally conducted: efficiency, effectiveness, and also economy. The 7, the department acts as a consulting department to other departments. Then 8, to provide feedback to the management regarding failure or success of the operation. The 9, to assist the board in the governance process by ensuring compliance with the code of conduct. Then 10, it acts as a preventive and detective measure against commission of fraud and errors. So let's move on to preliminary assessment of the internal auditing function. So this is basically on the lines of the work of the internal auditor by the external auditor. So the internal auditor should carry a preliminary assessment of the internal audit function before placing reliance on the work of the internal auditors. We have the factors to consider before placing reliance on the work of the internal auditing function. 1, competence and qualification of the internal auditors, such as the professional qualification and experience. Number 2, the scope of work of the internal audit function, such as the depth of coverage and the nature of the internal audit assignments and the relevance of their work. Then 3, the level of resources available to the internal auditing function in terms of personnel and computer facilities. Then number 4, the objectivity and the status of the internal audit function. Then when it comes to objectivity, we have a number of factors there to be considered. Like 1, the organizational status of the internal audit function, e.g. reports to whom do they report to? Like for example, if they report to the audit committee, then the objectivity will not be in doubt. Then number 2, whether the internal auditors are actively involved in other activities of the firm. Then whether the internal auditors experience restriction from the management. The number 5 factor to consider, due professional care. The external auditor should assess the quality of the internal auditors by checking whether 1, the work appears to be properly planned, documented, and supervised. Next, whether their recommendations are acted upon by the management. The number 6, effectiveness of the internal audit function by considering the following. 1, whether the department is headed by a competent chief internal auditor. 2, whether the duties of the internal auditors are clearly defined. 3, whether the department has relevant resources. Then the last one there, whether the internal audit program is effective. Then factor number 7 to consider, previous experience with the internal audit function of the entity, e.g., were they cooperative in the past? So we have areas of reliance by external auditor on the work of the internal auditor's work. So which assignment work can be done by the internal auditor on behalf of the external auditor? So one, visiting branches on behalf of the external auditor. 2, attending the physical stock take on behalf of the external auditor. 3, preparing support schedules on behalf of the external auditor. 4, administering the internal control questionnaire for the external auditor. 5, carrying out head count of employees. 6, pinpointing areas of known problems such as suspected fraud, internal control system, etc. Then 7, the external auditor can use the internal auditor's working papers to obtain audit evidence concerning the company's operations. So those are some of the work which can be done by the internal auditor on behalf of the external auditor. So before we proceed on to the outsourcing, let's have a look at a question. May 2021, May 2021, May 2021, May 2021. Question number 3B. May 2021, 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 question number 3B. Oh, yeah. You are the audit manager of Bev and Associate. You are currently briefing your team on the approach to adopt in gathering evidence for the audit of inventory. During the briefing, you inform the team that the auditor is required to design audit procedures to obtain sufficient and appropriate evidence from the sample items. You also explain to the team that the auditor could rely on the work of the internal auditors. So required, in accordance with the international standards of auditing, ISA 610, using the work of internal auditors, describe 5 factors Bev and Associate should consider when placing reliance on the work of the internal auditors. So which factors should they consider when they want to place reliance on the work of the internal auditors? So we are back on page 1. We have those factors there. Number 1 is the competence and qualification of the internal auditors, such as the professional qualification and experience. The second one, the scope of the work of the internal audit function, such as the depth of coverage and the nature of the internal audit assignments and the relevance of their work. 3, the level of resources available to the internal audit function in terms of personnel and computer facilities. 4, the objectivity and the status of the internal auditor function. 5, due professional care. Then 6, effectiveness of the internal auditing function. Then the last one, previous experience with the internal audit function of the entity. So those are the factors that you as an external auditor, you may consider before placing reliance on the work done by the internal auditors. So let's now move on to outsourcing of the internal auditing function. So outsourcing arises whereby it can be quite expensive to have an in-house internal auditing department or a function. So the firm may find it quite cheaper to obtain these services from external auditing firm. So outsourcing of the internal auditing function, these are new phenomenon where firms are moving away from maintaining an in-house internal audit department, instead contracting external service provider to provide the internal audit services. So instead of them having their own in-house department, they go outside there and look for an independent supplier who can provide internal auditing functions to them. Now, there are main reasons why they can't go for that outsourcing, because they have their core business activities and they want to maintain a clear focus in achieving their strategic objectives. So what can be outsourced, the part of their services which support whatever they're doing, then it could be the best option to go for. So we have the advantages of outsourcing internal auditing functions. So one, the quality of the service is higher since the quality of the service is higher since the professional firm has more qualified staff that's likely to get quality services from the expert. Two, cost savings related to staffing, e.g. pension. There's no need to pay your staff pension or those other fringe benefits, leading to reduced cost of the staff. Three, the independence of the outsourced function is higher, and hence the external can place more reliance on their work. Four, the firm will be able to access different specialized skills at no extra cost. Yes, the firm will be able to access different specialized skills at no extra cost. Next, the firm is able to learn in the hands of the experts. Six, the company can concentrate on its core business. Seven, the company can be indemnified in case of compromised services. Eight, a focused effort. Outsourcing avoids disruption, such as the staff attending meetings, coming late and leaving early, workers attending to their personal issues during office time. The nine, the service contract can be of appropriate time scale. 10, the firm is able to access experience and best practices since the service provider has provided the services to the many companies and industries. Then the next point is that it can provide an immediate internal audit function with the minimum setup time and cost. Then turn to the disadvantages of outsourcing. So what are some of the challenges that comes with outsourcing? So one is the risk of leakage of confidential information, is you may lose some of your business secrets to the competitors. The next, the management may lose control over the function. Next point, the professional firm may lack intimate knowledge of the business that the employees would have. Next, the professional fee tends to be quite high. Next, the professional firm will be subject to its contract and cannot be issued with the instruction in the same way as the employees. Next, the service provider may not be available on emergency. Next, relationship problems will arise where the employee of the professional firm are not readily accepted by the employees of the company. The next, it reduces the learning curve due to overdependency on the professional firm. Lastly, if the firm already had an in-house department, outsourcing would mean huge redundancy cost. So we have the effects of outsourcing the internal auditing function on the work of the external auditor. So how do they positively influence on the work of the external auditor? So one, more reliance will be placed on the work of the internal auditors because they're known to be independent. They exercise the much needed professionalism. And next, fewer tests will be carried out, leading to reduced audit fee. C, the internal control environment will be strong, minimizing chances of fraud and errors. The next point, smaller sample will be used by the auditor. The last one, the auditor will place more reliance in the ICS since they're likely to be more effective. The presence of the internal auditing function normally indicate the internal control system in place are effective. For that case, there'll be more reliance on the ICS by the external auditor as a basis of performing his auditing test and procedures. Okay, next we move on to internal check system. So internal check system is an element of internal control system. It ensures we have effective system being put in place. So when you talk about internal check system, is where work performed or work done by one officer is again automatically checked by another independent officer. But the two officers who are checking each other's work, they must be at the same level of competency. They must be at the same level of competency in terms of the skills, the knowledge, and also the worker experience. So what's the meaning of the term internal check? It's an arrangement of the duties of the staff members of the accounting functions in such a way that another automatically check the work performed by a person. So you do the job, somebody comes and check whether you've done it the right way. You follow the instructions as was directed. For example, if you're doing bank reconciliation, somebody will come again and do that bank reconciliation just to confirm if the work is in agreement with his work. We have essential characteristics of the internal check system. So the qualities that makes an effective internal check system. So certain qualities are needed to make an internal check system more effective and efficient. Such qualities are known as the features of the internal check system, which are as follows. One, division of work. This work must be divided into manageable units with clear areas of responsibility well defined so that each and every personnel will understand what tasks are they responsible for and whom are they accountable to. So no one should be allowed to have the right to perform the work from origin to end. Yes, so no one person should be allowed to perform some work from the very beginning to the end. For example, a transactional sale may have to be split into a display of article by the staff, the preparation of invoice by another, the receipt of cash against the invoice by the third clerk, the delivery of the article against the proof of the receipted invoice by another clerk, checking of outward movement of article against delivery order by clerk, and so on. So there is a lot of segregation of those common functions, which can be done by just one person from the start to the end. In big business houses, such specialized tasks increase the speed of work and automatically introduce internal checks. The number 2 feature, provision of checks. An organization should set up such provision so that the work can be checked by another staff. An officer can check the work of one staff by transferring to the staff and again. The number 3, use of devices. In this modern world, various devices can be used to do various functions, like the use of time record machines, wage determination machines, etc. An organization should use machines that help to make work of internal check easier. 4, self-balancing system. An organization can use a self-balancing ledger accounts which help to make work of internal check easier. Its effectiveness depends on its management. Then 5, job rotation. No individual clerk should be allowed to occupy a particular area of operation long. Familiarity with exclusiveness in a position of a person with greater flexibility to attempt manipulation with the system. Then 6, specialization. Not every staff may have such specialized knowledge to maintain accounts properly. Therefore, an organization should give the training to increase their skills so that the internal checks can be made more effective. Then 7, control. There is more chance of frauds where there is direct contact between consumers or the public. Therefore, a manager can keep eyes in those work so that the internal check system can be made more effective. The 8, authority level. There must be clear-cut authority levels according to sanctions to various transactions. Commensurate to the authority vested, responsibility must be extracted. The existence of authority levels results in a review of the operations of subordinates. So those are the essentials, the internal check system, the division of work, provisional check, use of devices, self-balancing system, job rotation, specialization, control, then the last one, authority level. So next, we need to ask ourselves, what are the objectives of the internal check? Why do you have to put these control measures in place? Where work done by one person is again automatically checked by a different staff. So there are several objectives of the internal check that are given below. 1, to minimize the possibility of error, fraud, and irregularity. Yes, they're meant to minimize or to reduce those irregularities. 2, to prevent the misappropriation of cash and goods. 3, to allocate duties and responsibility to every clerk in the organization. To ensure an accurate recording of all the business transactions. To enhance the efficiency of the clerk in the organization. To exercise moral influence over the staff members. To prepare final accounts with ease and efficiency. Then we have the principles of internal check. So principles are just guidelines which needs to be followed by the managers as they implement the internal check system. So just rules to be followed to ensure effectiveness of the operation of the internal check systems. So an internal check is based on some specific principles without which an internal check is of no use. These principles are given below. So 1, the process should be allocated among the staff of the business according to the duties, responsibilities, and rights. In such, there is no room for interference. So there must be allocation of responsibility. Those responsibility also comes with the rights, and no officer should interfere with another person's responsibility. B, no single person should have independent control over all the important aspects of the business. So no one should get that dominance over certain important accounting function in the business. C, the duties among the staff of the business should be changed from time to time so that no staff should be engaged in a particular job for a long time. There should be job rotation so that at least you are able to detect any form of irregularity or inefficiency or inadequacy that is being covered up by that officer. Then every member of the staff should be encouraged to go on a leave at least once in a year. These will help in detecting concealed fraud. So they should be proceeding to a leave, like under the Kenya employment law, is a 21 days leave. A 21 days leave, which should be compulsory and not optional. Then an efficient system of internal check should have, An efficient system of internal check should provide for automatic checking of the work of an assistant by others. Then the division of the work should not be much expensive. Next, the self-balancing system should be invariably used. Next, the financial and administrative power should be assigned very judiciously to different officers. And next, a person having physical custody of the assets must not be permitted to have access to the books of accounts. So then we go to the advantages of the internal check. So what benefits does this system provide to an entity? So one, moral influence on employees. The system of internal check puts moral check on members of the staff and enables them to learn honesty, hard work, and straightforwardness. Two, determination of employees' liability. The system of the internal check determines the responsibility of employees. The member of the staff may be held responsible for any irregularity carried on by him. Three, less possibility of frauds. There is less possibility of fraud under the system of the internal check because errors and frauds can be detected at an early stage. Four, increase in efficiency. The system of internal check ensures great efficiency and speed because the arrangement of internal check is based on division of labor. Then five, auditing made easy. The system of internal check facilitates the work of the auditors to great extent, enabling him to rely on test checking. The nine, final accounts can be prepared. In an internal check system, the profit and loss account and the balance sheet is prepared without any loss of time. Then seven, correct and complete records of all the transaction. The system of internal check may also result in correct and complete records of all the transaction on each balancing of the books of the accounts. 8, detection of dishonesty or irregularity and dishonesty or irregularity in the concern by the members of the staff can be detected before they assume any complication. The 9, test checking possible. Suppose the auditor finds the system of internal check satisfactory, then by taking into mind, it detects all weak points. He can take the help of test or checking. Then you go to the disadvantages of the internal check. One, it is expensive. But the system of internal check is more expensive and time consuming. Two, slackness in the work. This is also a serious defect of the system of internal check. The auditor may show slackness at work. He may rely on the system of internal check blindfold, which may affect the quality of the audit work adversely. 3, not suitable for small concern. The system of the internal check is not suitable for small concern as it may be an economical and small concern. 4, grouping among employees. If the employees of the concern join hands, they may keep the employer in the dark and may cause many irregularities, defying any detection thereof. This groupism amongst the employees may not be healthy. So that's all on the internal check system. There is much on it there, right from the characteristics to the objectives, advantages, disadvantages, and also the principles of the internal check system. So I just now to move on to a subtopic which is missing in part of a handout, and these internal audit key performance indicators. Internal audit key performance indicators. So this one you write internal audit key performance indicators. 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 In short, is the KPIs. KPIs. So if you are an organization and you're interested in achieving excellent performance, you must have the standards of measuring or of evaluating your performance, just to check whether you are effective, efficient in the course of achieving certain objectives. So internal audit department also needs to be measured by using what you call the key performance indicators. So these are basically quantitative appraisal tools that we use to measure how effective, how efficient the internal auditing function it is. And that can also determine the extent of reliance by the external auditor whenever it comes to getting that evidence to be using to arriving to a certain audit conclusion. So we write the following that KPIs, that's the key performance indicators, KPIs, the key performance indicators. KPIs, the key performance indicators. Are quantifiable measurements, are quantifiable measurements, are quantifiable measurements, are quantifiable measurements that demonstrate the effectiveness of an individual, department or organization, in achieving key goals, Full stop, next line. Clearly defining goals, and tracking meaningful KPIs can provide valuable evidence, to show that internal audit activities, are supporting the business strategic objectives, are supporting the business strategic objectives. Full stop, paragraph. Within internal audit, there are two main types of KPIs. Number one, execution. Number two, value. paragraph. Most of the KPIs tracked by internal audit, measures execution and completion rates. Measures execution and completion rates. The common key performance indicators include the common key performance indicators include number one, percentage of the audit plan completed, So you need to ask yourself, how far have you gone with implementing the audit plan? Are you at 60%? Are you at 40%? That can also guide in determining the effectiveness of the internal auditing department in realizing some of their objectives. Number two, count of issues found. And recommendations made. Yes, that's how they are appraising the internal control system. So how many weaknesses have they been able to pinpoint out? And how many possible recommendations have they been given to improve some kind of a system? That will also determine the level of the effectiveness of the internal auditing department. Number three, percentage of recommendation implemented on time. Yes, they've given recommendation. Have those recommendations been acted in good time? So you can ask yourself, what percentage of those particular recommendations been acted upon? And next, the hours spent per audit. So the lesser hour, the better. It will tell the level of the efficiency and effectiveness in performing the audit work. And next, certification held by the audit team members. Certification held by the audit team members. Next, customer satisfaction. Next, increased productivity and efficiency. Next, decreased expenses. And next, leaner operations. So that implies that they have optimal number of employees, not just having workers who are doing nothing or just idling around. You must be able to maintain an optimal number of employees, having a leaner operations. And that will contribute to what? Efficiency and cost reduction of the department. So those are some of the metrics that can be used to evaluate the efficiency of the internal auditing function. Sasa, right from customer satisfaction, the last 4 points is on the value KPIs. The last 4 points, those are value KPIs. I love the other points, ni execution KPIs. Execution KPIs. Let's go to another subtopic and just see the internal auditing function, which is information technology threats and control. 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 So IT got an impact on the information system. Sorry, IT has got an impact on the internal control system put in place. It has got an influence on how that system will be operating. ICT inakuja na some of the risk that could have an adverse effect on the internal control system. It is the responsibility of the managers to put in place various control measures to safeguard the system. On the area of our IT controls are administered in 2 levels. Two are what we call the general IT controls. General IT controls. Application IT controls. Application IT controls. Application IT controls. In a topic on computerized accounting, we shall be learning these various controls, which are basically the measures put in place to safeguard the computer system or the information system. They can be either general or they can also be application. So this area, we just want to look at maybe the benefits of IT to the internal control system. Lastly, we'll be asking ourselves, what are certain IT risks? So let's do the introduction by writing the following: that the use of IT affects. The use of IT affects. The use of IT affects the way they control activities. The way the control activities are implemented. The way the control activities are implemented. The way the control activities are implemented. Yes, the use of IT affects the way the control activities are implemented. Full stop. From the auditor's perspective, from the auditor's perspective, controls over IT systems, controls over IT systems, controls over IT systems are effective when they maintain integrity, when they maintain integrity of the information and security of data, and security of data. Let's go to the benefit of IT to the ICS. 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 So 1, it enhances the timeliness. It enhances the timeliness, availability, availability, and accuracy of information, and accuracy of information, and accuracy of information, and accuracy of information. So let me repeat that one again. It enhances the timeliness, availability, and accuracy of information. Number two, it facilitates information analysis. It facilitates information analysis. It facilitates information analysis. Number three, it enhances ability to monitor the performance. It enhances ability to monitor performance. It enhances ability to monitor performance of the entities, activities. Of the entities, activities. Of the entities, activities. Number four, it reduces the risk. It reduces the risk. It reduces the risk that controls will be overlooked. It reduces the risk that controls will be overlooked. It reduces the risk that controls will be overlooked. Next, it enhances the ability. It enhances the ability. It enhances the ability to achieve effective segregation of duties, to achieve effective segregation of duties, to achieve effective segregation of duties by implementing security controls, by implementing security controls, by implementing security controls. Let's go to IT risks. IT risks. IT risk. IT risk. IT also poses. IT also poses. IT also poses specific risk. Specific risk. Specific risk to the entities ICS, to the entities ICS, to the entities ICS, e.g., number one, unauthorized changes to data in the master file, unauthorized changes to data in the master file, unauthorized changes to data in the master file, unauthorized changes to data in the master file. Number two, unauthorized changes to systems or programs, unauthorized changes to systems or programs, to system or programs, to system or programs. Next, potential loss of data, potential loss of data, potential loss of data, potential loss of data, or inability to access data, or inability to access data as required, or inability to access data or required. Next, access of data without being authorized. Access of data without being authorized. Access of data without being authorized. Access of data without being authorized, e.g. by the computer hackers. E.g. by the computer hackers. e.g. by the computer hackers, e.g. by the computer hackers. So those are the things that we need to know in this part of the internal auditor function. So you can just take note of this question. You have to look at them at your free time. So questions. April 2022, question 3A, question 3A, question 3A. December 2021 pilot paper, December 2021 pilot paper, question 3, question 3. January 2022, January 2022, January 2022, question 1, question 1A, question 1A. September 2021, September 2021, September 2021, question 1, question 1, question 1, May 2021, question 2B, May 2021, question 2B, question 2B, question 2B, question 4C, question 4C, question 4C, question 4C. November 2020, question 3A, November 2020, question 3A, question 3A. November 2019, question 5A, November 2019, question 5A. May 2019, May 2019, question 3C and 5 and 5A, question 3C and 5A. November 2018, question 2B, November 2018, question 2B. May 2018, question 4A, May 2018, question 4A. November 2017, question 2B, November 2017, question 2B. May 2017, question 2A and 4A. May 2017, question 2A and 4A. November 2016, question 3A. November 2016, question 3A. So, kuna question kwa natafuta at the beginning. So let's have a look at that question. Is May 2021, May 2021 on question number 4C. 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 In some organization, the internal audit function is involved in the provision of a broader range of services that can either be classified as assurance services or consulting services. So required. Discuss four distinguishing features between assurance services and consulting services provided by the internal audit function in an organization. So let me repeat that question. In some organization, the internal audit function is involved in the provision of a broad range of services that can either be classified as assurance services or consulting services. So discuss 4 distinguishing features between assurance services and consulting services provided by the internal audit function in an organization. Let's use on one side to a consulting, another side to no, it was not audit, assurance. 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 If on this upper, let's say over upper, no, let's start with the definition first. Because the definition say that under consulting, it is advisory and related. It is advisory and related. It is advisory and related client service activities. It is advisory and related client service activities. Client service activities, comma, the nature and scope, the nature and scope, the nature and scope of which are agreed with the client, 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 comma, are intended to add value, are intended to add value, are intended to add value, and improve an organization governance, an organization governance, an organization governance, risk management, risk management, risk management, and control processes, and control processes, and control processes, and control processes without the internal auditor, without the internal auditor assuming management responsibility, assuming management responsibility, assuming management responsibility. At the other side, let's go to assurance, the definition. Assurance. It is an objective examination. It is an objective examination. It is an objective examination of evidence, for the purposes of providing, an independent assessment, on governance, risk management, and control processes, for the organization, and control processes for the organization. So another one, well, this one also that next point number two under consulting, so that it entails implementing a plan. It entails implementing a plan. It entails implementing a plan. At this side, under assurance, it involves developing a plan. It involves developing a plan. It involves developing a plan. Number three, point number three under this one, say that number three under consulting, it involves only two parties. It involves only two parties. It involves only two parties. It involves only two parties, i.e., the audit client, the audit client, the audit client, and the internal auditor, and the internal auditor. Yes, sasa hapo the internal auditor and providing your advice to the client. I love the client in much cases is seeking that advice, but am seeking and receiving advice from the internal auditor. The other side, it involves three parties. Assurance, it involves three parties. It involves three parties. Sasa hapo kuna three parties, i.e. the auditor, the managers, and the user of the audit evidence and conclusion, and the user of the audited evidence and conclusion. Sasa hapo kuna auditing, the one who is responsible to prepare the subject matter. In this case, it is the managers, the ones who are preparing the financial statements. They are putting in place the internal control, a system being evaluated or being assessed by the auditor. Alafu now the user who is going to rely on the conclusion and the evidence provided by the internal auditor. Next base is that under consulting, it provides recommendations. It provides recommendations. It provides recommendations. It provides recommendations. Then under assurance, it requires an opinion to be made. 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 Next one under consulting, it is focused on the future. It is focused on the future activity. It's a focused on the future activity. It's a focused on the future activity. Then under assurance, it focuses on the historical data. It focuses on historical data. Under consulting, it results in recommendations for improvement. It results in recommendation for improvement. It results in recommendations for improvement. It results in recommendations for improvement. The other side It results in an audit report. It results in an auditor report. It results in an audit report. It results in an audit report. So those are some of the features which distinguish between consulting activities and assurance activities. So that will now bring us to an end of that chapter on internal audit. So we're going to jump to topic 11, which is now topic 10, or just topic 11. You have the handouts there. In topic 11 is errors. Errors, frauds, errors, fraud, errors, irregularities. Fraud, errors, and irregularities as per the ISA 240, the International Standards of Auditing 240. So errors, fraud, and irregularities. So these are items that affect the financial statements to be materially misstated. So you work as an auditor, though you don't have a primary responsibility or an obligation of detecting and preventing errors and fraud. But because you are offering assurance services to the users, you will be required at least to be very cautious, to be very keen to try to identify some of the material misstatements in the financial statements. So when it comes to the detection and prevention of errors and the fraud, it is a pure management responsibility. They're the ones who put in place effective internal control system that has the capability of preventing, detecting, and having the frauds and errors to be corrected. So in this topic, we have got areas to focus on. You need to know what is an error, what's a fraud, and what is an irregularity. We need to know the differences between an error and a fraud. We need to know the examples or the types of errors and the fraud. The other one, we need to ask ourselves, what are the responsibility of the management and the auditor with respect to prevention and detection of errors and fraud. Then lastly, we'll be asking ourselves, what are the causes of errors and fraud? So we can use our handout there to look at these terms. We begin with the basic terms on how the three terms are defined there. So number one, we have got errors. So what is an error? These are unintentional misstatement. Yes, so errors are known to be an innocent mistake. They are unintentional mistake. Errors are innocent mistake. Errors can also be defined to be what? Unintentional mistake. The person who is committing an error does so unknowingly, that they are committing an error. So errors are not deliberate. They're not committed deliberately. The number two took on a fraud. So this is a deliberate act by an individual or in collusion involving deception with an aim of gaining unjust, illegal financial advantage. So when one is committing a fraud, they have a motive. The motive up is either to gain financial advantage, which is illegal. So fraud are not innocent mistakes, they are deliberate mistakes. Then you have irregularities. So this is an event or an activity which is contrary to the company policy. So if you override the procedures put in place, you don't follow the company laws and regulations, it amounts to what? Irregularities. So next is the differences between errors and fraud. Is you need to know the differences, the distinction between an error and a fraud. So one is that errors is an unintentional misstatement, then fraud, a deliberate act. Two, errors do not involve deception. The other side, frauds involve deception. Three, errors do not involve collusion. The other side, frauds in many cases involve collusion. Next, errors are made by junior clerical staff. Frauds are committed by officers with authority. More so the senior managers, because the bank stops with them, they have got more influence in the company operations. And next, errors may not call for criminal action, while frauds will instigate, while fraud will instigate, not investigate, but instigate a criminal action. Instigate a criminal action. Will instigate a criminal action. And next, that errors are not difficult to detect. Yes, errors are not difficult to detect because much of them is due to clerical mistakes during data entry or data processing. Then frauds are difficult to detect. So what are reasons why frauds are difficult to be detected? One, they are conceived by the parties involved. Two, they involve collusion between two or more people. Three, they are committed by managers with authority who can easily override the controls. Four, the auditor's investigative powers is limited. Then five, detection may be hindered by time and cost. Then you have a classification of frauds that causes material misstatements. ISA 240 identifies two cases of fraud that causes material misstatements. So we have got two types of frauds. The first one, fraudulent financial reporting. Then the second one, misappropriation of the company's assets. So for managers to commit fraudulent financial reporting, the motive in Akonga, either they want to do a cover-up for their irregularities committed, or sometimes just want to please the owners and the various stakeholders on the company performance and also the financial position. Over the company is making profit, and the company net value is also improved, which may not be the case. So it's an act which is committed through what we call creative accounting, violating some of the accounting policies and principles. There is a departure from a well-known accounting policy and principle. So fraudulent financial reporting involves one, manipulation, falsification, or alteration of documents and report. Yeah, so they could be faking some documents here and there, trying to alter some documents and maybe report to reveal a different picture. Two, suppression or omission of the effects of a transaction from the records. So suppression up, something like maybe expenses, the amount can be reduced. And when you reduce your expenses, it means you minimize on your cost. And when your revenue is maximum, it will be indicating whether the company is profitable, which could not be true. 3, recording transaction without substance, i.e. fictitious transaction. They're not even incurred in the course of the businesses, but they appear in the books of the accounts. 4, deliberate misapplication of accounting policies and the principle. Like one of the most common violated accounting principle in the matching concept. The matching concept, where expenses which were incurred in making the sales can be carried forward to the next accounting period, so that we understate our expenses, then our revenue or the sales amount becomes what? Inflated. 5, misrepresentation or intentional omission from the financial statements, events, transaction, or other significant information. Then we have the techniques used by the management to engage in fraudulent financial reporting by overriding the controls. 1, recording fictitious journal entries. Inaweza kuwa maybe sales, inaweza kuwa expenses, inaweza kuwa purchases, which actually did not occurred. Number 2, inappropriately adjusting the assumptions used to estimate account balances. With respect to provision for bad and doubtful debts, adjustment with regard to the depreciation, or year-end adjustment come as accruals and also the prepayments. And next, concealing or not disclosing facts that could affect the amount recorded in the financial statement. 5, altering records and items related to significant usual transactions. Then you have the misappropriation of the company assets. So this is often perpetrated by the employees and involves relatively small immaterial amounts. So examples: embezzling receipts, stealing of physical assets or intellectual properties. 3, causing the entity to pay for the goods and services not received. Then 4, using the entity's assets for private use. So those are the 2 types of fraud. I will still be meeting other classification of the frauds later in our discussion. So next we go to the indicators of fraud and errors in an organization. So which could be the signs whereby the managers are engaged in fraud or there is material errors in the financial statements. So 1 is a missing vouchers and documents. 2, unsatisfactory explanations which are not convincing. Whenever we do an inquiry or having a discussion with the managers, they're not able to provide satisfactory explanation. There could be a possibility that something is being hidden. There's some information which is being hidden. 3, unexplained item in suspense account. Is when you look at the suspense account, you find there are certain items which appear there. They appear in the suspense account. When you try to get an explanation, how do they end up being posted in the suspense account? The managers are not able to give a proper explanation. 4, unsupported or unauthorized balances or transactions. Then 5, last minute adjustment that significantly affect the financial statements. 6, evidence of unduly lavish lifestyle by the officers of the company. Yes, that's now the office of the company living beyond their means. The income doesn't matches, their lifestyle doesn't goes in accordance to maybe the income they earn from the company. So in that case, a lifestyle audit can be done to do an investigation to establish what would be the other possible sources of income. 7, the failure of figures to agree with expectation, such as those produced by analytical review procedures. Analytical review procedures helps to detect deviations or the variation from certain performance, and those needs to be investigated. Managers need to explain why did those particular deviation occurred. So when they are not able to agree, that one, it means there could be possibility of a mistake or a fraud committed. 8, missing inventory of physical assets. 9, unusual delay by the entity in providing the requested information. Next, unwillingness by the management to address deficiencies identified in the systems. Next, tolerance to violation of the entity's code of conduct. Next, denial of access to records, facilities, or certain employees. Next, absence of reconciliations. They're not doing the bank reconciliations on regular basis. So we have the factors there, factors that increase the risk of fraud and errors. So 1, dominion by a single individual. Then 2, complex organization structure that does not seem warranted for. 3, large amount of cash returned. 4, inadequate monitoring of controls. 5, pressure on the management the pressure on the management to employees. And so the managers are putting a lot of pressure to employees. So you're working under pressures, you are possibly likely to make a mistake. 7, the characteristics of the inventory. Then last one, significant related party transactions. So next part, we have our responsibility regarding detection and prevention of errors and fraud. So what are the manager's responsibility? Then what are auditors' responsibility? So the ones who have got the primary role of prevention and detection of errors and fraud, it is the company management. Auditors, they have got no responsibility. When we're looking at the objectives of the audit, prevention and detection of errors and the fraud was a secondary audit objective. It is an incidental objective and not a primary objective. But however, still, auditors have a role to play when it comes to the material errors and fraud. So we can end there for today. Then when we meet on our next lesson on Thursday, we shall continue from that part of the responsibilities regarding detection and prevention of fraud and errors. So thank you for finding time to attend today's class. Enjoy the rest of the weekend. We meet next week